Hello and good morning everybody. Here with Martin Penev, Chief Account Executive Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. As usual, we start with a short look at the US markets. Basically, all main US indexes are in slight correction to the downside, with a bit larger declines on the Dow and the S&P 500. Employers in the US added more than 200,000 jobs in November as the country closes in on its strongest year for the payroll gain since 1999. A report in the coming week may show growth in the US manufacturing probably eased in November, while service industries expanded at a faster pace. The Fed Beige Book is also released. Secretary of Homeland Security, Mr. Johnson, will testify at a U.S. House hearing on the immigration policy that they're setting up right now. USD Canadian dollar 75 pips up, USD Swiss franc 6 pips down, USD JPY 72 pips up. We have manufacturing PMI data all over the calendar today, and FOMC Dudley will have a speech as well. Looking at the European markets, the German and the French main indexes have posted their declines in the end of the week, last week, after some consistent gains. Some manufacturing data in the calendar, all in red. Outlook, along with a decline in the Italian GDP. No event for tomorrow, so we will look ahead till Wednesday when the ECB will print the European zone GDP and retail sales outlook. The euro is trying to hold its ground and stop the negative trend, and currently ranging between 1.26 and 1.235 per dollar. A short look at the UK markets. The FTSE 100 lost 4 points. 10-year gilt yields stayed below 2%, and the bonds rose 0.02%. The pound lost about 0.6% against the dollar on Friday and closed the week with a decline, making it the 6th consecutive week of decline. Despite the advance of the pound during the week on Friday, we saw this gain being trimmed and as investors closed their positions for the week and drove the price downwards. There are also mounting concerns that the fastest growing economy in the G7 is losing momentum due to disinflation pressure coming from abroad. The recent statements from the Bank of England were more than dovish, prompting investors to revise their expectations for the next interest rate hike. On Friday, we saw a decline in housing prices and consumer confidence as well. The cable was 93 pips down on Friday, lost another 37 pips from yesterday till today. It's going up right now. The pound versus Japanese yen, 9 pips down, going up today, versus the Aussie, 67 pips down on Friday, 195 pips range going up today. The pound versus the Canadian dollar, 26 pips up on Friday, 122 pips range going down as we speak. Manufacturing PMI today, Bank of England consumer credit, money supply, mortgage approvals and lending. These are all for today. Also net lending to individuals, which are coming any second right now. Construction PMI is scheduled for Tuesday, services PMI on Wednesday, Bank of England quantitative easing and interest rate decision on Thursday, and inflation expectations, which is marked at Tier 3 event. I think it's worth mentioning this report will come out on Friday. Moving along to Asian markets, the Nikkei gained 130 pips, Hang Seng 580 pips down, S&P 200 105 pips down. USD versus the yen, 35 pips range, 11 pips up. The Aussie lost some momentum, and the Kiwi as well. The China manufacturing PMI showing again worse than expected outlook. The China factory gouge drops as shutdowns add to showdown of the economy. Surprise end to India gold controls boost wedding demand. Clashes at Hong Kong government headquarters. Apparently the conflict there persists. United Nations spokesman warned about huge risk of Ebola spread and a risk of Ebola spread. Basically, tomorrow we will have the Royal Bank of Australia interest rate decision and rate statement. Wednesday, the gross domestic product for the Aussie year-on-year and quarter-on-quarter. And now moving to commodities, where we have a little bit of a disaster there. Commodities fell to the lowest in 5 years as oil sank on prospects for the glut. Gold fell, and other Swiss voters rejected a move to force the central bank to buy bullion. And data from China confirmed a slowdown in the world's top user of fuels and metals. Gold slumped after Swiss voters rejected a plan for their central bank to accumulate bullion, and oil extended declines to a 5-year low, curbing demand. Silver plunged as well to the lowest price since 2009 as the dollar climbed up. The gold posted a third monthly drop in November as the Federal Reserve ended a bond buying program that failed to stoke inflation amid lower energy prices. Crude fell to the lowest price since 2010 as the OPEC took no action to ease the oversupply. A proposal that would have required the Swiss National Bank to hold a fixed portion of its assets in bullion was voted down by 77% to 23% in a referendum that was done yesterday. A lot of news in the calendar, and having in mind that this is the last month of the year, we are expecting quite some volatility all over the charts, as all size investors are looking to close long-term trading and set their targets for the next year. That was all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers and bye-bye.